2 uh, takes a little bit of a similar approach as 16.1, except we're going to deal with closing entries. Again, you are dealing with the 16-1 worksheet, Discount Books, Inc., which has been given to you. I'm on page 493, and it actually benefits you to read these directions and follow them closely because it will help you walk through this easier. First thing says, close the income statement accounts with credit balances. The first two things, A and B, that you're going to do strictly deal with numbers out of the income statement off of the worksheet. If you recall, it's trial balance, adjustments, then income statement. So you're dealing with those numbers. It's going to be on the back side of that packet, page 1 of the packet. So we're going to close accounts with credit balances. Now remember, when we close things, we have to do the opposite to make it zero. So sales, purchases, discount, purchases, returns, and allowances are all debited. And the sum of those three numbers is going to be put in the income summary. Income summary comes back again. Okay, so we get a total of $436,415.57. Then we go on to part B, which is in green here on your screen. That one says to close all income statement accounts with debit balances. Well, if it has a debit balance, we have to do the opposite, so we have to credit. Income summary will always start this section, and the accounts will be listed below. And there's a lot of accounts. Okay, I'm not going to read them all to you, but it starts with sales discount and it ends with federal income tax expense. Those are all credited. Income summary on top is the total of all of the credits. That number is $364,980.63. Okay, you may deal with times where there's fewer accounts, you may deal with times when there's more, just depends. Part C says close income summary. Now, this is the part that confuses people the most. And I always tell people it's easier to look at the worksheet all the way at the bottom where it says federal income tax or net income after federal income tax, sorry. And we are closing the income summary just like it says here. Okay, so that number is going to be a net income, so income summary goes on top. It's $73,283.19. We put that money in retained earnings. Retained earnings is an account that stays open, so that number is credited in retained earnings. And we know that because it says net income. If it's net income, we know that retained earnings is always going to be a credit. And the last thing it tells us to do is close the dividend account. Okay, so we look that up on your worksheet, and this is given to you. It's $16,000. You look up dividends, and it's $16,000. It's usually either toward the bottom of the front side or near the top of the back side. It just kind of depends on what accounts are there. So retained earnings are debited $16,000, dividends are credited $16,000. And that is all of the accounts that are closed. And as you can see, I color coded those. First one are the income statement credits. Next one is income statement debits. Next one is closing income summary. And the last one is closing the dividends account.